Hey folks, Brett Pattison here. Today we are going to discuss one of the biggest enemies that is getting into your way of creating wealth. Hey folks, Brett Pattison here with IGGA Global Advisors, coming at you from the financial capital of the West, that is Salt Lake City, Utah. Thanks for spending a few minutes of your time with us today. Over the next few weeks, we are going to discuss something very important to understand. Whether you're managing your money on your own or you're hiring an advisor to do it for you, these principles must be understood because they will be the ultimate barrier to you not creating the wealth that you desire. Let's get started. The enemy that I've been talking about is one that I know you're familiar with. In fact, it's you. It's what lies between your noggin. It's what occurs in your brain that I wanted to address today. Recently was researching a book. Jason Zweig from the Wall Street Journal, great journalist, came out with a book called Your Money and Your Brain. And in that book, he discusses how humans think, right? And specifically surrounding losses. When somebody loses money, and we're not talking about realized losses. Most of the time, we're talking about unrealized losses. I'll explain to you what I mean by that. Jason Zweig says, financial losses are processed in the same area of the brain that responds to mortal danger. Think about that for a second. You open up your portfolio. You're down 10%. You see red. Heck, you could be down 5%. You could be down 20%. Anytime somebody sees red, the response is one that is similar to being in mortal danger. A Nobel Prize was awarded to the same kind of study I'm talking about, and they assigned it a specific name to when your brain responds to losses like mortal danger. It's called myopic loss aversion, and it basically proves that mankind has a greater sensitivity to losses than to gains. Losses hurt a whole heck of a lot more than gains feel good. As a result, think about this. Mortal danger, losses feel bad. Here's the market. Great picture from the behavior gap. But if you look at that line in the middle, and that's the market, right? And the market ebbs and flows. It goes higher, it goes lower, and hopefully over time creates higher highs and higher lows and moves higher. But anytime that you are at a point to where the market is down, right, which is normal market behavior, fear creeps in. The desire to sell creeps in. And so with that myopic loss aversion, with that mortal danger in your mind, what do? You sell. At the worst time you could possibly sell. Then the market starts going back up. And then typically you buy at the high and you sell at the low and you repeat until broke. That's the enemy we're talking about here. It's that understanding what losses truly mean. And for us, it's our belief that, again, great picture from Behavior Gap, that we as advisors get in the way of you and that mortal danger fear and making a big mistake. That's one of the many hats that we wear as advisors. So be aware in your own mind as to how you view losses and how it can impact building your wealth over time. Relax. We can take it from here.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.